How do people buy real estate with whole life insurance? Let's look at an example. Here we have a real estate investor with a whole life insurance policy. First, we see what he pays, then his cash value, and then his life insurance benefit. To the right, we see his annual yield, which is the annual rate of return he's earning on his cash value. Now, this is a tax-free yield, and there's also no market risk because the money's not invested in the stock market. Next, we're going to look at the exact same policy, but taking a loan to buy an investment property. First, we have what he's paying. Then we have his cash value. Then an annual loan of $500,000. To the right, you see his loan balance, and then you see a loan payment of $60,000 per year. He's paying it back at $5,000 per month. Then we can see how much of his payment is applied to principal and how much is applied to interest. If we go back to the year he took that $500,000 loan, what happened to his cash value? What happened to his life insurance benefit? They both went down. By how much? $500,000, the exact amount he took in a policy loan. Now, as he starts to pay that loan back, what happens to his cash value? It goes up every year. When the loan is fully paid, what is his cash value worth? Just about $1 million. What about his life insurance benefit? Well, it's worth about $1.5 million. Keep those numbers in mind. If we go back to the first example, where he paid money in and just let it sit and grow, and we look at the bottom, the same point in time, what is his cash value worth? About $1 million. What about his life insurance benefit? About $1.5 million. They're exactly the same. The reason why is because his cash value kept on compounding or earning dividends and interest even when he had borrowed it out to go out and purchase that investment property. Now, if you're a numbers person and say, well, I'd like to see exactly what I'm paying in loan interest and compare that with what I'm getting in interest from the insurance company, we can look at a comparison. Let's take a look. First, we see in purple, interest received. This is what you are receiving from the insurance company in total dividends and interest on a yearly basis. To the right, we see interest paid. This is what you're paying to the insurance company every year in loan interest. And then we see the spread. This tells me if I'm positive or negative. A negative spread means that I'm paying more in loan interest than what I'm receiving in interest from the insurance company. We don't want a negative spread. That doesn't make anyone feel good. So, why do people do this? The reason why is because I know my cash value is going to keep on compounding even though I take that money out and go and invest it in real estate in this case. In this example, we saw that he earned a peak annual rate of return of about 5.5%. Now, the drawback was the early years, where he actually had a negative return. So it does take time to overcome that. But when we look at those returns, that's tax-free, and there's also no risk. And then I can use that same money to go out and buy an investment property, and that's going to earn me a return on my money. So now I'm earning a return on both the life insurance policy and also my real estate. So if I'm using money in the bank, what happens? A lot of real estate investors express this. Well, I might have $500,000 in cash. I take that cash out, go buy a property, and then eventually I refill my bank account to $500,000 and I repeat that process. Whereas with a life insurance policy, I take that $500,000 loan, but when I pay it back, well, I pay the $500K back, plus I've earned interest the whole time as well. So it keeps on compounding and I come out way further ahead down the road. That is why real estate investors use whole life insurance to invest in real estate. Now, numbers aside, here's the best part. I don't have to work with a bank anymore. So many people have just jumped for joy because they're tired of working with banks. When it comes to policy loans, there's no obligation to repay them. I can pay loans back however and whenever I want. I can even not pay them back in many cases. Loans don't impact my credit score, and I am in full control. So this is why people use whole life insurance to buy real estate. If you'd like more information on how this works and questions that real estate investors ask, you can check out our 3-step guide to buying real estate with whole life insurance.